Welcome back to our series on the recently published report on artificial intelligence in the South African financial sector. In this episode, we will be looking at the benefits and risks brought about by AI. Nolwazi, tell us, what is the biggest benefit of AI as far as the financial sector is concerned?
So we split up the benefits question between traditional AI and generative AI. And what we saw the largest benefit of artificial intelligence being was data analytics and insights. So this was overall the financial sector, including your pensions, your lending, your payments, then the three sectors that we mentioned in the report, which are your investments, banks, and insurers. We see for banks, though, that their largest cited benefit was cybersecurity and also combating fraud and anti-money laundering. But then when we move to generative AI, we see the highest benefits being in operations and IT, enhancing efficiency and productivity internally.
Which AI risk do you think the sector is still overlooking?
I think the biggest risk that the sector is overlooking is the black box problem. So in the study, we identified that approximately 21 or 34% institutions do not use any form of explainability methods, which is quite concerning, as you can imagine. And we see that becomes a challenge to ensuring consumer trust in the systems, because at the end of the day, the product is supposed to enhance the consumer's experience with financial services. And so not having explainability takes away the ability of consumers to question decisions when they're made and understand why perhaps they got declined for a loan or got higher insurance pricing than another person. So, I mean, there's so many risks that we identified. And another interesting one was the inability to identify vulnerabilities. So industry also mentioned that they may struggle themselves to find the vulnerabilities that they need to be aware of. And I think that puts us as regulators under pressure a bit, because we need to now ensure that we understand the full risk matrix of artificial intelligence in the financial sector to ensure that whatever framework standards or guidelines are issued fall in line.
Speaking on explainability, what are some of the powerful AI tools that industry can use in order to balance the need for explainability?
That's a very good question, because of what I've mentioned about institutions not using explainability methods. It's quite interesting to see that, because you would think the burden would also fall on them to feel like they need to be accountable to their consumers. But the tools they can use, we've already mentioned some in the report. These are post-model tools that see that, perhaps your loan was declined because of your loan to income ratio that currently exists, and they can explain to the consumer that way. And so other tools involve having human in the loop when running through these models, ensuring that there's human oversight and that the proper governance frameworks are in place. And so I think going forward, we'll still have this discussion with industry as we work on the discussion paper on artificial intelligence, to engage with them what their pain points are with explainability, what we expect and what we think will work, and also to understand if those expectations are practical for industry.
Nolwazi, in your response, you touched on the role of the regulator and also governance frameworks, and I'm so glad, because in our last episode, that is exactly what we will be touching on. So please save that for later. Thank you so much for listening in on our second episode. These are the benefits and the risks of AI within the financial sector. See you next time on our last episode, where we'll be looking at the governance frameworks. Thank you.